For March 2025, I want to show you the prices are holding steady, even though we have significantly more inventory than we've had this time of year. 2013 was the last time we really had a February with this kind of inventory for a spring market. However, people have been asking me, if we have all this inventory and all these new houses are coming for sale, the prices are definitely going to go down, right? Because there's more options to buy. Everyone wants to sell at the same time. More supply should drive prices down. Only if your demand situation doesn't change. And we have a ton of pent up demand, a ton. So think about 2020 and the bidding wars between everybody wanting to move in COVID and then rates being in 3% range and then everybody crawling over each other, medieval bloodbaths, as I was talking about in 21 and 22 to compete for houses. And then the rates went up. So people just backed off the fence and did nothing. A lot less people bought in 22, 23, 24 because, oh, we're waiting for the rates to come down, waiting for the rates to come down. At some point, your demand, AKA life need to live in a different home, busts at the seams. You had another kid, or mom and dad have moved in, or I've changed jobs, or I have to go back to the office now, and I haven't had to drive to an office daily or 3 times a week in 5 years, and now I have to again. I am not okay with this commute. All of those life needs to create that demand of selling and buying and just moving in general, those have been put on hold for so long that they're popping. Okay. As I always mention, I have a Denver 7-county metro. So that's the South Metro Denver Realtor Association statistical data set. You can see our median close price for residential properties. So this includes single family, condo, townhome, multifamily, paired homes, all that kind of stuff. But we went up 570 to 592. Not unusual to have a 2-3% price increase over January, February, March timeframe. Like that's pretty normal, even to have 2 to 3% month over month if you're looking back at previous years, right? From January to February. So we do typically get a little bit of a price jump just because of activity and more things are happening. November, December shoppers, that's usually when the price kind of bottoms out seasonally for us. And then things start to pick up in the spring, not just price wise, but activity as well. We had a pickup in activity, but now we're seriously picking up for a spring market. You can see January to February, usually it's not quite as much of a bump. And we still got a pretty significant increase. So a lot of our buyers came on board. They just came on board a few weeks later than normal, and that's okay. I want to talk through a whole bunch of different things because there's a lot of things to keep an eye on in this market. So I'll try to keep it on track and organized for y'all. Our activity is back up. Pendings are going to be buyer activity, right? Buyers are going out getting things under contract. Seller activity is going to show in new listings. And I mentioned last month how much inventory we had come on in January, how many new listings, over 4,200 new listings. But even active listings, you can see how we were over 8,000 active listings. So new listings is, hey, seller said, let's go on the market. Active listings is the new sellers that come on, plus everything else that was already carried over as available inventory. So active is going into the grocery store and saying, hey, on the cereal aisle, here's things that I can pick readily off the shelf, whether they just got restocked or not. But we haven't had 8,000 active listings in a February market. Yeah, since 2013. To have that kind of available inventory, it hasn't happened since then. Even in 2019, when things were pretty good, in January, February, we didn't have 8,000 homes. We had 5,000 or 6,000. A lot of that pent up seller need to move out has come onto the market. The right sizers being downsizers, right? I've been in my house too long, it's too big, or I like the size, but where it is, I don't need a 2-story, I need a ranch, or I need a patio home instead of a single family. And we'll talk a little bit more about attached housing in a minute. But when it comes to all of those sellers, the golden handcuffs, oh, my rate's 3%. I don't want to sell it and lose my rate. At some point, the rate is not more important than your life and how you use the house that you live in. And those things have to adjust and keep up because houses are not just investments, guys. They are your roof over your head. It's where you raise your kids. It's where you come home after work every day. It's where you sit down and have dinner with your family and your friends. It needs to meet your lifestyle. The fact that we have so much inventory is great, but we had almost 3,500 properties go under contract within that 30-day period. Our days on market went down from 44 days for median days on market down to 29. Okay, that's a pretty good chunk to cut 2 weeks off your typical marketing timing in a 1-month period of listing in January versus listing in February. This is why having agents that understand the numbers, understand seasonality, understand the current supply and demand situation, not just for the general market, but for your individual property type matters because it makes a huge difference. Okay, so I'm still on days in MLS, but what I want to show you the difference is the blue line is single family. So you can see it down here on my legend. So blue line is single family home, so detached. And then the red line is your condo, townhouse, and multifamily. So what we call attached. Look at the difference in your days in MLS. And we're going to check a few different stats because it's going to show you quite a bit. For your single family homes, your median days on market is 26. For your attached homes or your condo, townhouse, multifamily, it's 42. Your single family homes are selling much quicker. This isn't a surprise, but if you look over the last couple of years, there seems to be a significant divergence in these numbers. Seasonally, there's activity. However, you can see how closely, for the most part, they generally ride together, even over the last couple of years. But now, over the last 12 months, we're starting to see this pretty significant divergence in these numbers, especially now in the spring market. Months of supply makes a difference here too, because we have 3.5 months of inventory for condos, townhouses, and multifamily. The demand is not there. And there's a handful of reasons. One is the costs. When you're talking monthly HOA expenses, the insurance for a lot of townhome and condo complexes, the master policies for hazard insurance and weather and roofs and things like that are being removed. And so the HOA fees for those attached properties are starting to go up for a variety of reasons, but a lot of it is insurance costs. So if you're on the border, a lot of those buyers are saying, I'm just going to stretch a little bit and I'm going to go buy a single family home. It'll last me longer. I'm not paying monthly HOA fees. However, I have some other stats here, but for attached housing, 23% of those were purchased with cash, but only 17% of the single family homes were purchased with cash. There's a lot of reasons too, but your downsizers or your right sizers that have equity in their house that are listing their single family home, all of these new, look at this, 3,200 single family homes newly listed in February, and then buying those attached properties with the cash and with the equity. That's a lot of the movement in that market. And it's a shift. It's opening up of the inventory. It's some absorption of the condo, townhouse, multifamily market, but not quite as quickly, right? And let's look at a couple more things. I realize this is a long one because I got really excited with the numbers this month. It's showing some different things that we haven't seen in a long time. For sellers, be aware your condo, townhouse, you don't typically have to have as many showings, 7 to 8 showings to get under contract, but that's going to take a couple of months because you're only getting about 4 a month on average for the market. Single family homes, 7 showings per listing per month, and then 13 to get under contract. 1, because there's more choices. Buyers have more to look at. 2, buyers want to look at more houses than condos. When I'm showing buyers of condo, townhouse, multifamily, they don't need to see as many. 1, because a lot of them are pretty similar. You look at 3 or 4 different complexes, 1 or 2 in each. They have a lot of similarities. When you're looking at single families, there's a lot more nuances between them. There's a lot more difference in how the home was maintained, in the neighborhoods, and the layouts, and the finishes, and the styles. Much more variety there, and people want to see more. And they also want to see more to feel comfortable in their purchase decision to get under contract. Anyway, if you're looking to sell, be aware there's a lot more inventory than there has been this time of year than in the last 12 years. That doesn't mean you can just stick a sign in the yard, put a pie in the sky price on the house, have it look like crap, and get multiple people crawling over it. It's not going to happen. Okay. It hasn't happened for a couple of years now. I don't expect that to come back. One of my sellers a couple weeks ago, we had 8 showings and 5 offers. Blew my mind, but it was a pristine house. It was priced very aggressively, not underpriced, but very aggressively. It was just immaculately cared for. It was wonderfully staged between the sellers and I. We did a fantastic job. It was marketed extremely well. I talked about all of the amenities. I talked about all of the cool stuff in the area, how quick it is to drive to DTC. Everything was done right, and it attracted the best buyers out there in the market right now. That's why having a good agent matters. But it's back to basics, especially for sellers. It's got to be priced. It's got to be in good condition. It's got to be move-in ready. Buyers don't want to do stuff. The average concession in our market right now, even though the prices are holding, average concessions were almost 0.75%. So 0.7, 0.8% of the purchase price. And that goes for both single family and for condo, townhouse, multifamily. So even though those prices are holding, because of the options on the market, because the buyers have some leverage and some choices here, for the last 10 years, for a spring market, we've been down here, down in the 3,000 listing range. Okay. We're above 5 for single family. and almost at 3,000 for multifamily homes. Look at this. You've only got a couple little blips in the late summer and fall. We haven't had 3,000 attached homes available for sale in a spring market. Let's see, did we hit that in spring? Almost in April. That was only 2,400 for attached, but back since 2012. You've got to realize like buyers have choices now. So it doesn't mean that the prices are necessarily going to come down because there's a lot of pent up demand. There's a lot of buyers that want to buy. It just means that there's more sellers too. So it's just a healthier, more active market is going to be coming back. And I fully expect that to continue. But sellers have to position, price, and present really well. Buyers need to have a good agent that's going to help them understand what their choices are, what their leverage is, that they can negotiate some concessions, that they can get a little bit of money back, either to help with affordability on buy downs. The last thing that I want to hit is this balance of buyer and seller supply and demand. We have all of these active listings and these new listings coming on. I'm seeing more first-time buyer incentives than I have seen since about 2016, 2017. More $25,000 first-time home buyer grants, $15,000 first-time home buyer grants, more first-time buyer only incentive rates through credit unions and things like that. So one of my buyers right now is under contract with a first-time buyer only conventional incentive rate that none of the other lenders could touch. They just said, we can't do that. That lender is wanting those people to come into the market and they are incentivizing them financially to do so. There's more of that I'm seeing than I have in a long time, which is great for the people that want to get in and need some help with the cash piece up front. The other piece is even with all this activity, and I'm looking down at my notes here because I was running numbers on some stuff for the attached homes, pending versus new. So how many houses went under contract in the last 30 days versus how many new listings for that type of house came on in the last 30 days. So essentially that's my monthly absorption if I'm just looking at a 1 month snapshot in how the market's progressing. For the attached houses, we had 1,427 new listings and 862 went pending. So 60% went under contract in a 30-day window. That's still pretty good activity, but it does mean that there's more choices, more supply than there is immediate demand. And for the detached, the single family homes, 81% of those went under contract in the last 30 days. It shows that there's still a lot of movement, still a lot of activity, but still a lot of buyer leverage. And sellers can sell as long as the house is priced, promoted, presented properly. You've got to do the prep work up front to have a successful sale in this market because there are choices, but there's also buyers out there. Don't think you can stick a sign in the yard and some stupid price on it and it's going to sell. I'm still seeing that, guys. And like, that's not the market. It hasn't been that way for a while. Anyway, let me know what your couple of takeaways were. Leave them down in the comments. What your thoughts are. I was waiting for the softening in the prices to come and it isn't happening because there is activity. And you can see, obviously, we're leveling out. This is really good basis, actually. We're leveling out a little bit from 2020. That was just nuts. And we had pretty consistent growth here. I think it's going to be a little bit more flat and it's more gradual. It's healthier. It's more sustainable. We have a lot of people that need to sell their house that have been in it too long. And we have a lot of people that need to buy a house that haven't been able to get into one in too long. I'm hoping that movement and activity will spur some stuff, but it means hiring the right agent to help you get it done as quickly and efficiently and to promote and protect your interests as much as possible, to be your advocate through that process is going to be more and more important versus having somebody that can just stick a sign in the yard because the market's going to make up for their lack of capabilities. Hopefully that was good context for y'all. I know it's a ton of data. Let me know what you liked and disliked down below. If you want someone to help sit down with you and make a game plan to buy or sell, I have a link down below. You can pick a time right off my calendar or just you can book a quick call with me if you just want to talk about some things and see what makes sense for you and your situation. Thanks so much for the time and for listening to my data rambling. Hopefully you found it at least a little bit insightful and have a great day.